Good afternoon. We are here at SuperInvestor 2013 in San Francisco, very close to the home of the US venture industry. And I'm chatting with Phil Black, one of the founders of True Ventures. Phil, tell us about the firm.
Sure. So the firm was started in 2005. I'm one of the founders, and we have raised 3 funds to date, and right around $200 million per fund, all to be deployed in early stage venture capital within the IT sector. So for us, that means that we are most interested in dynamic founders. Usually there's 1 to 4 of them who have a really interesting idea about a market of the near future. So we're very, very interested in companies that are thinking about things that are going to become very important in 1 to 3 years down the road. And so that allows for us to be very long-term in nature and think about what the major trends are and how we can participate in those areas with the founders that we invest behind.
So Phil, you've formed your firm in 2005, so well after the dot-com crash of around 2000.
Yeah.
A difficult time at which to raise funds, but you've managed to do that. Now, returns in the venture space, for the last decade have not been great, but despite that, investors are interested. Indeed, we see signs of growing interest from investors in venture. And are they right to take that view?
I think so. So our industry it revolves around investment vehicles that are 10 to 12 years in duration. So our first fund was raised in 2006. We won't really know the full results of that until 2016 or 2018. But what I do know is that the venture industry, we had a period there where everything zoomed up and then everything crashed, and now we've kind of come back into a much more of a reality zone. And so it really kind of from 2001, 2002 timeframe is when the venture market that are going to drive the returns for this decade, we really started about 10 years ago. So we've got a number of companies that continues to grow every quarter that are of size and of value that make me think there's going to be a lot of good returns for the industry as a whole.
So you think the next few years we'll see a lot of good exits and good realizations for venture?
I do. There was just an article in the local paper here in San Francisco talking about 25 businesses that already have over a $1 billion implied valuation, and they thought that number was going to go to somewhere around 75. So that would that's very good. Yeah.
Now, what areas are you seeing most opportunities in today? What are the areas that really excite you and your colleagues at True Ventures?
Yeah. So I mentioned that we like to think about markets that will be really interesting and growing rapidly 1 to 3 years from now. And the major trend for us that started for us really in 2008 is the idea of hardware that you either wear or a sensor that you place in your office or on the streets, and that piece of hardware or sensor speaking with your handheld phone or another device where it collects all the information, and then you're able to consume all that content on the device itself. So we've got personal digital trackers, which are talking about steps and sleep, but we're moving into, we've got streets and parking and sensors. We've got one that's working on hearing enhancement and working with your iPhone. It is fascinating to me. And then my co-founder could not be more excited about the UAV, the unmanned autonomous vehicles, also known as drones. That's an open source project that we helped fund just about a month ago. But that's a 1, 3, 4, 5 years away, but it's very exciting.
So the whole sort of integration of mobile and hardware and software and computing.
Yes, yes. The mobile phone is a more powerful computer than what we had 20 years ago on the desktop, 10 years ago. And the form factors of being able to create a device that has all sorts of powerful circuitry and being able to then speak with the devices through Bluetooth. It's such a greenfield operation for us, and we're very excited about that.
Tremendous. Sounds great. Thank you, Phil.
Thank you.
Thank you.